Good morning, guys. Today's video is on the bank reconciliation statement, and as you can see, this is a blank format for the bank reconciliation statement. The heading obviously is important. I've abbreviated, which you cannot do, and obviously you need to have the name of the business and the date as well in the heading. Now, when it comes to the bank reconciliation statement, there are three important things you need to look out for. Okay, number one is what the business has recorded but the bank has not. Okay, so things which the business has recorded, which means we've recorded it in our records, but the bank has not yet recorded it. Number two is what the bank has recorded, but the business has not. So things which is on the bank statement, but we have not yet recorded it in our records. And then the last one, number three, is errors. Okay, in red, you'll notice the solution to each of those problems. So by number one, with the things that the business has recorded but not the bank, the solution is to record it on the bank reconciliation statement. By number two, things which the bank has recorded but the business has not, the solution is recorded in the bank ledger or the CRJ or CPJ. And number three, by errors, there are two cases. Either the business has made the error or the bank has made the error. If the business has made the error, then it needs to be corrected in the bank ledger or the CRJ or CPJ. And if the bank has made the error, it must be corrected in the bank reconciliation statement. At the bottom on the board, you'll notice I put a bank ledger account. This is something you're used to. It's a bank ledger account. It's an asset. On the debit side, you'll notice I've got balance brought down. That will be your balance at the beginning of the month. And also on the debit side, I've got receipts. And on the credit side, I've got payments. So those are the totals which comes from your CRJ and CPJ. So that's the way your bank account would look at the moment. You'd have a balance, then you'd have receipts on the debit side and payments on the credit side. And then things that come up from number two on our board over here, where it says what bank has recorded but business has not. All of those things which come up from that category must now be included in the bank account. So for example, if the bank has recorded interest on the current account, which you've earned interest because you have a good bank balance. That is a receipt. It will go on the debit side of your bank account. So here on the debit side, you'd have interest income and the amount that you found from the bank statement. Another example would be if the bank has charged you bank charges for the month. So bank charges is an expense. It will go on the credit side of your bank account. So here on the credit side of bank account, you'd have bank charges for the amount that you found from the statement. Okay, this bank account will then be updated and the balance of this bank account will then be transferred to the bank reconciliation statement. So in the bank reconciliation statement, you'd start off with balance as per bank account. That balance as per bank account comes from the bank ledger, which you will record at the end of the bank account. You transfer the balance to the bank reconciliation statement. And in the bank reconciliation statement are all the adjustments which come from number one on our board. So if I go back to number one, it says what the business has recorded, but the bank has not. The solution was to record these things on the bank reconciliation statement. So all of the things that come up from number one will now be recorded in the bank reconciliation statement. What are those things which can be recorded on the bank reconciliation statement? There are two common ones. The one is an outstanding deposit and the other one is outstanding checks. An outstanding deposit means that a customer had given us cash in our business and we had not yet banked the cash. So for example, someone came into our business, paid us money and we did not yet bank the cash. It would be something which would be outstanding on the bank statement. So you will record that as an outstanding deposit on the bank reconciliation statement and that amount will be credited. The second one I referred to was outstanding checks. That would be, for example, if you had issued a check to a supplier who you owe money to and they had not yet gone to cash the check. It would be an outstanding check. So you would put the outstanding checks on the debit side of your bank reconciliation statement. Okay, so from the top, you have balance as per bank account, which would be either on the debit or credit side, depending on what the bank ledger has. Then you'd have credit outstanding deposits, which would be on the credit side. You'd have debit outstanding checks, which would be on the debit side. And then you'd have, if there was an error made by the bank, it would be corrected here as well. And finally, at the bottom of your bank reconciliation statement, you'd have balance as per bank statement. Okay, that would be the balancing figure between the debit and the credit side. And right at the bottom of your bank reconciliation statement, you need to add up your debit side, add up your credit side, and the two needs to be equal.